here at Warehouse Partners. Alongside my Chief Operating Officer, Aaron Volp, we comprise the general partnership in the Porterville Light Industrial Warehouse investment. It's going to be a fast-paced, informative webinar, and I think you guys will get a lot out of this short time we have together. So without further ado, we're going to jump right into it. So I've had personally about 35 years of commercial real estate experience, mostly multi-tenant, medical office and laboratory, and I have operated in the Central Valley region of California for the better part of a decade. And my partner has been with our firm since the almost very start. And so together we have about a decade's worth of light industrial, multi-tenant experience, if not more. In that time, you'll hear more about our experience and why we like the asset class and why we're so enthusiastic. And I invite you to learn more about us and Warehouse Partners. But without further ado, we're going to jump right into the investment. And one of the things that we wanted to do with Warehouse Partners was leverage our experience. And in that decade plus, it was a unique focus on multi-tenant light industrial, and in particular, as I mentioned, in Central California. And when we talk about multi-tenant light industrial, we're mostly talking about metal buildings, and we're talking about what some people call small bay, some people call it mini warehouse. We call it multi-tenant, but it's essentially the same thing. And these are smaller units, and these are tenants that don't occupy these big warehouses that you frequently hear about more in the media. So an Amazon or a Tesla, Walmart, they're going to occupy 1 million square feet, hundreds of thousands of square feet at a time. And this is much different. This is the other end of the industrial spectrum. And it's an often overlooked part of the industrial investment class. And it's that overlooking that creates the opportunity. And we've had a lot of recent success over these last 10 years, and in particular these last couple of years, we delivered 144,000 square feet of light industrial business park to the Madera, California market. We recently had a grand opening, and that was well attended, and by all accounts, it seems to be a really successful project. We're leasing at pace, and we can talk about more of that later, or if you want to learn more about that project, you can find information on our website there. But one of the things we want to talk about is, sort of the genesis. If we're talking about Madera, if we're talking about Porterville, we want to talk about why Central California, why we do these things, and why it works best in Central California rather than other markets. And really the story about Porterville and the story about Warehouse Partners and the story about Madera Light Industrial is really about a fully integrated light industrial experience team and really bringing that operational excellence. And we're talking about management, leasing, development, acquisition, disposition, and operations. So really all action. And when you think about investments and you think about the team in which you're wanting to handle that investment, are you wanting them to farm it out to various third parties, or are you wanting them to oversee those investments directly and be involved on all phases? And it's been my experience, and Aaron Volp, my business partner's experience, that things work best when you handle it in-house. And Warehouse Partners pretty much does everything except the general contracting, but that's something that we interface, almost every day with our GC if we're in development. And so having all of those things in-house gives us greater control and helps us understand sort of our risk. We're in the business of managing risk, right? Investments are about risk and reward. And as best as we can manage the risk, then we can leverage that and generate more reward. And that's what this is all about, because it's an investment. And so we're doing due diligence and we're understanding the various elements of the project. So let's talk about, what are the highlights of light industrial, right? This multi-tenant asset class. And when we talk about metal buildings in particular, and Warehouse Partners really likes metal buildings because of the ease of construction. And, they go up in a relatively simple fashion as compared to other asset classes. So we're not talking about constructing glass office towers, corner retail. These are basically pre-engineered metal buildings, and they're assembled on site. So Warehouse Partners will order the materials stored on site and put it together as the development unfolds. And the demand, right? We're talking about light industrial demand. Why would we ever develop anything if there wasn't significant demand? And that's what makes Central California so special. You've heard a lot of things about California being difficult, and many of you know the complexities of California. And all of those things are true. But one of the things that Warehouse Partners specializes is taking those complexities and turning it into an advantage. And once built, if we've done our research and we understand the tenants, and we understand the light industrial tenant market better than anybody, I like to think, particularly in Central California, it would be very difficult for someone to come in afterwards. So because construction is difficult, there's pent-up demand, and because of Warehouse Partners' expertise and getting projects delivered on time and on budget, one would speculate it would be very difficult for somebody to come in after us and develop a similar project. And we found and done research, across the nation in other markets. You may hear about multi-tenant light industrial in other markets. There are fashionable markets. Whenever you're listening to this webinar, I'm sure there's some market that's being promoted as being the best. But those are pros and cons. There's no limitation to overdevelopment, right? If somebody likes your project, they could do the same thing across the street, and that would be very difficult to replicate in California, particularly in Central California. And they're also all-weather investments. When I moved to Central California from New York City 11 plus years ago, it was interesting and fascinating to me being introduced to the asset class in sort of this tail end of, what is going to happen next part of the Great Recession, right? The Great Financial Crisis. And, things were up in the air, particularly in the commercial real estate market and particularly in the Central Valley. It was hit very hard. But one of the things that really attracted me to the asset class was the seemingly unlimited demand from tenants trying to lease these small tenant spaces. And let me clarify, when we're talking about small tenant spaces, we're talking about, roughly about 2,000 square feet plus or minus. And multi-tenant industrial has, different unit sizes, but one of the unit sizes that we really like is sort of that 1,500 plus, 2,000 is really the sweet spot. It depends on the markets in which we operate. Obviously, we want to deliver a project that's attractive to tenants and is needed. But we really found that tenants in challenged economies, sort of like where we are today in the economy, and there's some uncertainty, this particular asset class performs better. And it performs better than a lot of other asset classes, and it performs a lot better than various forms of other parts of the industrial asset class. And there's a number of different elements that go into that. If you've spoken to me before, or I encourage you to, set up an appointment and we can do a one-on-one, and we can discuss things in detail. But one of the things I really liked was in challenged economies, industrial tenants, retail tenants, office tenants, doesn't matter the asset class, they're looking to downsize. And there's not a lot of good options in sort of that small industrials, particularly in California where it's really hard to develop. And there's a number of different factors, very hard to finance. We talked about the difficulties in the development process. And if you do have a good balance sheet and you're going to develop industrial, oftentimes it ends up being, the Teslas or Amazons that we mentioned, because from a psychological standpoint and from a banking standpoint that's going to issue credit, it's just easier for them to get their head around in sort of their really rigid, underwriting criteria. So they're difficult to finance and they're difficult to build, but if you do have the expertise and you have the background, it can be done, and it can be done where other people maybe have overlooked those markets, and that's really where the advantage is. So let's talk history. At one time there was a lot of light industrial being developed in California, and I just want to have a footnote that California is the nation's largest industrial market in terms of size and in terms of pricing on sales and leasing. So this is really significant. And so that kind of frames the opportunity, right? So if there's just this pent-up demand in this sector of California industrial, the reason I'm going into so much detail is why it's not being delivered, right? And there's a number of different factors, but let's paint the picture with history. 4.1 million square feet of light industrial was delivered in the 70s throughout the 80s. And the reason why a lot of light industrial was delivered during that period is it was pre a lot of the requirements you see today. And today there's a lot of requirements on light industrial or any commercial asset class. And we're talking about ADA access, fire sprinklers, all of the modern requirements that a commercial real estate new development would need to get permitted and delivered and entitled here in the state of California. So as time progressed, things got more and more expensive. And so building a metal shack on a concrete slab was no simple task as it was in the 70s and 80s. So then you start to see things tapering off in a really significant way as sort of things in California, is really reflective of, how complex things got over a period of time. And on this slide, you're going to see just it's tapered off, and now there's only a couple 100,000 square feet delivered annually of multi-tenant light industrial. And again, that frames the opportunity is that, at one time there was a lot being developed, and California's only gotten, busier, and there are only more people in California doing business. So there's less light industrial to go around. And if we do read about all of this industrial being developed in California, it's mostly large industrial, heavy industrial, but no light industrial to support it. So let's talk about Warehouse Partners' track record, and let's talk about our know-how in delivering these type of projects. And I'd mentioned that we delivered 144,000 square feet of light industrial business park to the Madera, California market. And, Warehouse Partners, because we know so much about the particular market in which we're going to develop, those are the things that we really leverage our experience with the municipalities. Being a small and efficient and tight team, those are the benefits that I think our limited partners as investors really get from us, rather than investing in, a large investment group where you don't really know the guys that are operating the project. You really get the Warehouse Partners team in your investment. And so we were able to deliver this project during the pandemic, on budget, and within a time frame that I think that a lot of people would be envious of. And we raised about just over $6 million in 10 months. And this is again during the pandemic, and kept that project on track. And much of that credit goes to my partner, Aaron Volp. And so the leasing program is on pace to over deliver. We're ahead of our leasing projections, and you're going to hear often from Warehouse Partners or myself that we want to be conservative in our estimates. And that goes throughout our history and my personal history with commercial real estate and investments. You always want to project achievable returns, and then if you over deliver, that's a major benefit to you and your investors. And that's really how you build a long-term business, is making reasonable commitments, meeting them, and then if you exceed them, certainly our investor audience would be more than happy to come back for another investment. So let's talk about a little bit about this particular about Madera, and I think that frames the picture on the Porterville investment. Warehouse Partners' goal is to develop these projects where they all look and feel the same as much as possible. And what you're generally going to get is a 10-acre light industrial business park. And what we mean by that is it's self-enclosed, it's gated and fenced with video security, 24/7 access through a keypad, right? So it's got lighting, it's got the security features, and those are one of the things that we really noticed that was lacking in the light industrial market in Central California, were these key features that tenants feel safe, they feel comfortable operating 24/7 if they need to. And that's really the thing that separates light industrial from maybe self-storage or these larger industrial complexes, is that you can run your business out of it. It's got a small office, it's got a warehouse bay, it's got an interior restroom, it's got a shop sink, and it's got an outdoor fenced-in area. Some people call that outdoor industrial storage. But those are key elements that the tenants really need in a modern light industrial facility that you'll be hard-pressed to find anything available in Central California. And I would wager, most markets in California, you would struggle to find, something like this available. So we delivered this industrial investment on the basis that there's enough tenants in this particular market, and this one happens to be Madera, and Porterville is much the same, is that if you have a good base of light industrial potential tenants that have really good businesses, or they're regional or national companies, but they just need to warehouse in maybe not 100,000 square feet, they just need a couple thousand square feet in a particular market or region, where are they warehousing? And if they're commuting significant distances, that really creates the opportunity. And what my partner and I figured out was, having signed over 1,000 leases and renewals in the space in the greater Fresno market, we realized that a lot of the tenants that we had Madera addresses, right? Madera is 45 minutes, 50 minutes north of Fresno, depending on where you're coming from. And so you had tenants commuting, up to an hour each way to get one of these small light industrial units that you can run your business out of. And so, part of our investment thesis is, would these tenants, perhaps be willing to pay, a couple dollars more, or a couple pennies more to warehouse in their home market? And usually the answer is yes, if you have the right, sort of economics behind it. And it's got to be a region where, the trajectory is moving forward, right? There's a lot of construction, and that talks a little bit about, the type of tenant profile that we're going to have in these type of developments. And we can develop in a little bit more into that, sort of as we go through this presentation. But really what you're going to get is, multi-tenant. So there's a multitude of small warehouse bays. In particular, in Madera, we have 74. You can combine them. We have tenants that need 2 or 3 of these, or they see them as almost, modular in a way where they can, add more space as they grow. And these are smaller leases, and 2,000 square feet. In particular, 1,950 square feet on 24-month leases. And depending on where you are in the economy, some people think that short leases are great, and some people think that it creates sort of like this management burden where you're always doing leases and renewals. But one of the things that my partner and I realized is light industrial tenants, in particular these tenant profiles, contractors, people that make and build things, industrial storage, and again, those national and regional companies that need this size space, they really like shorter leases. And we found that once we find a good tenant, and these are really nice businesses, they're often family businesses and they've been cash flowing for many years and they have great balance sheets, but they don't have a lot of requirement for a lot of space, right? And so that we're capturing that market. And what we found is that typically, when there's a good fit there, and part of that is our leasing and management program. And once we find that good fit and we've analyzed that they are a good fit and they fit into sort of like this whole management program that we're running, typically they're going to renew. And that's really where we see a lot of the benefits of, managing, leasing, and doing the project as, a team. And so that allows us to, increased rents as the world gets more expensive, as we've had in these last couple of years. So, if you had signed a 50-year lease a couple of years ago, you may not be keeping at pace with inflation. And, we're keeping at pace with demand. So a lot of things depend on where we are in the economy, but it gives us that flexibility, right? And it also gives the tenant the flexibility where they don't have to think too much about, being locked into a 10 or 15-year lease anymore. I don't really think the economy is moving in that direction, but at least for us on our light industrial tenants, we found that to be very much true, is that we're well balanced with our project as operators and sort of the tenant requirements on having a lease that's just long enough. And that's really borne itself out over the last 10 or 11 years of working with those multitude of tenants. And so you're going to see ample parking. Madera is divided up into 4 buildings, metal buildings, and they've got these particular amenities that tenants want. And doing all that leasing, my partner Aaron and I figured out that there's some really important key elements. And those elements are, there must be an office where they can, at least have the option of running their business out of, just enough for a desk, maybe 2. And, there's this warehouse bay that's open, right? And it's not encumbered by too much office. And that's something that we heard a lot of feedback on, looking at older assets, looking at projects that maybe weren't designed from the get-go. And that's one of the reasons I want to key on why we do development. And it might have been an easy path to take one of these older developments and paint it and fix it up and then release it at a higher lease rate. But what we found is these assets are in such demand that getting one at a decent price and then doing whatever renovations that we needed to do. And then on top of that, a lot of them just have this obsolescence where they don't meet, today's requirements, or there's not enough loading space. There's always a challenge, right? And when we looked at all of these projects, and warehouse partners, when we do development, we look at, hundreds and maybe thousands of development sites to get it right. But the one thing that we do know is we know what light industrial tenants want, is sort of like this broad market in the Central Valley. There's key things. And again, they're going to need that office. They're going to need a restroom. Really important and often overlooked, they like a shop sink on the inside of the warehouse bay. They want it to be open without any posts, right? Clear. And they need an outdoor area. And this is really important to some tenants, is that they have this outdoor area where maybe they can park a vehicle or hose things off. And these are things that you rarely see put together in a comprehensive, development. And there wasn't anything developed sort of at scale. You see these little developments here and there, and they have this, sort of mix of tenants that maybe don't fit that great into, a well thought out, management plan. And, here, if we're looking at this slide together, you can see that you can combine these units, and that gives the tenant the flexibility to grow. And it gives them the option of, maybe capturing more space. And, oftentimes we find that, they have a requirement that's small, they like the space, and maybe they would take 2 or 3 of these. We were prepared for, 74 individual tenants. And, it's been, well balanced between a lot of people wanting just one space, and then, tenants wanting, combined spaces. But it does give that those options, right? And just as a quick note, we don't like to use the term flex too much. You might hear flex applied to light industrial. That implies that there's often office build outs or a retail storefront, and these are very much light industrial tenants. No quasi retail, no cannabis, no heavy automotive. All fine businesses, just not. We've found over history that it doesn't really fit in sort of the light industrial management mix, right? We want to create an environment that is stable, and we want to create an environment where tenants renew. And so those type of tenant profiles, maybe if they're using chemicals or something like that, those are really specialized industrial uses, and we feel as though maybe they're best suited at somebody else's project that in particular specializes on those subjects. But it's really easy to maneuver around our light industrial business parks, and we found that to be a challenge on a lot of the light industrial business parks that are existing, particularly in Central California. And you can see that you can drive around the entire project. Obviously, that makes the fire department happy. And so you can load in the rear. You've got your roll-up door in the front. And so you've got everything that a light industrial, modern tenant would need. And we take this development and we replicate it in Porterville. And we don't want to really invent the wheel when we do these projects, right? We know what light industrial tenants want, and so let's deliver to them, in their backyard. So for Porterville specifically, right, we're very excited about the Porterville project. It was an interesting project for us from the get-go, but the more we discovered about Porterville, the more we liked it. And Porterville is, it's this municipality in the Central Valley that, if you look at it from an aerial, it looks, maybe it's not the biggest municipality, but a lot of things about Porterville and a lot of things that Warehouse Partners does, at first to a lot of people, looks can be deceiving, right? One of the things we like to really do when we think about, a project is, can we get a deal, off market, right? And that's what we have here. We got Porterville off market. Madera was on the market, on and off in the market for a really significant amount of time, and we're able to use our expertise to kind of work out problems. And that's sort of the basis of a good deal, right? Everybody on this webinar and myself, we're all value investors, right? We don't want to overpay for something out of the gate. And that's really important. That's something that my parents, hammered, into me from a really young age, is that, to have a deal, right, in good times or bad, you really have to start with a really good deal. And that's really the basis of a Warehouse Partners investment. You really need to have a good deal, and then it has to be well located, and then you're going to have good partners, right? And that's across the spectrum. The municipality, the people that invest in the deal, the people that help us construct and lease, and the tenants, the whole way through. So for Porterville, we found a lot of these things to be true. We got an off-market deal, and that off-market deal was introduced. So first we were introduced to Porterville through a relationship that we had, and then the municipality was really eager to meet with us. They assembled everybody, and those are the things that we appreciate, right? We like business-friendly municipalities, and some of you on this webinar may be surprised that there are municipalities that are business-friendly and development-friendly in California, but those are sort of the elements that we seek out, right? We want those things that clear a path to development, right? We don't make things hard on ourselves on purpose, right? We don't develop near residential or something like that. So a lot of those things that we look for, Porterville ticked the box, right? The parcel shape was right. It's in an existing industrial area. We have a municipality that's really interested in developing light industrial because they need it. And we had tenants that were commuting significant distances again. So, they're traveling 45 minutes to an hour for inferior light industrial storage, or, these business parks, or maybe some of these smaller things without, security or the elements that really light industrial tenants need. And so let's talk about the returns, and then we're going to put a bow on it and we're going to tie it all together. So for Porterville, you're going to get a development that looks and feels like the Madera development that we showed you. It's a light industrial business park, gated and fenced. It's in a municipality that's rapidly growing. It's right across the street from the airport. They just delivered about 1,000 square feet of Indian gaming casino, and they're going to build a conference center and a hotel in that market. There's a lot of construction. They've annexed, hundreds of acres for, housing, mixed-use development. There's a lot of big municipal projects going in. All of those things are the things that we like to see. And those are really key drivers. And those are things that, light industrial tenants, that creates the market for them, right? A lot of construction, and we have a lot of construction, a lot of e-commerce, a lot of industrial storage. And so all of those things together, you have a market where if they're developing that much and you have a really active municipality, none of those things are available to potential light industrial tenants, particularly in the Porterville market. And so we have a 9% preferred return. We have a 3.6 targeted equity multiple on this project. And I just want to create a moment where we can talk about the returns on this project have increased the longer we've been working on it. And that may be sort of contrary to what you see in other asset classes. It really reinforces the strength of the light industrial market, particularly in Central California. Again, Warehouse Partners traveled across the US. We've looked at other markets. People have invited us to these development-friendly municipalities in other states and cities. It really works best in Central California, in our opinion, just because we know the market, but just because of the economics. And so we're raising up to $8 million. We have a $100,000 minimum investment, and this is a 10-year hold. And in the previous slide, you probably saw that it's a QOZ, a Qualified Opportunity Zone. And that is why it's a 10-year hold, is to satisfy the Opportunity Zone benefit. If you guys have questions specifically on opportunity zones and how you can potentially shield, defer, and eliminate capital gains, I would invite you to have a discussion with us. Right now we have about, I would say maybe 30%, 35% are opportunity zone investors in Porterville. And it really depends on, when you talk to us, that percentage does change. A lot of our investors are into Porterville because it's a good light industrial deal, right? They either like us as operators, they understand the deal, and so they like it on that basis, opportunity zone or no. And then for those of you that do have any type of capital gains, whether you've sold things, real estate, it really doesn't matter, and there's a capital gains tax liability. This is a great way to invest those gains, and instead of paying taxes today, grow them in the investment, and there's all sorts of benefits that are associated to that, like a stepped up basis. A lot of people use it as an alternative to 1031. But again, those are things that we can talk about perhaps in another webinar or specifically on a call. And that is why it's a 10-year hold. So we're going to develop it and we're going to hold it for 10 years as per those opportunity zone rules. And so here we are. It's going to look and feel like our previous development. It's going to leverage our experience as, operational excellence, deep track record, bring all of those things together in a really nice development, partner with that municipality that really needs light industrial development. This site was zoned light industrial. It's entitled by right for a light industrial business park, right? So we're off to a really good start. A lot of the things that people spend a significant amount of time trying to get accomplished were already, set in this this parcel that we've identified right across the street from the Porterville Airport, right across from all of this other development that's happening in that market. We're particularly excited about all of the things that we learned that are going into that market, federal dollars, state dollars, a lot of private investment, it just goes on and on. And that's something, again, we can talk about in specifics if, we get to talk, in person or on a one-on-one call or another webinar like this. So as a brief overview, Warehouse Partners really likes those, 2,000 square foot units plus or minus. So in this particular layout for Porterville, again, our light industrial business park setting, right? We're delivering to the market what they need and what they can't find. And what you're going to get here is 2,250 square foot units on one side. And on the other side of the parking lot, the centralized parking lot, you're going to get 5,000 and 10,000 square foot units. And the reason we have a slight difference from our Madeira development is Warehouse Partners spends a lot of time trying to understand what the tenants need. And we don't build things for tenants that don't exist. So we really felt that there was a really strong demand in those 2,000 plus or minus square foot units, but there was a lot of demand in terms of those 5 and 10,000s. Again, we want to make sure that office space is just enough and it has all the modern amenities that the tenants need, but we just balance this one so we meet the tenant demand specifically. And that's going to be something you're going to see as a regular hallmark of any Warehouse Partners development. So, we have a 2-year development period, and right now we are in the final stages of that pre-development period. Again, it's a 10-year hold because of the opportunity zone benefit. We want to maximize those benefits. It's a pre-engineered metal building, so you're going to have the benefits of a building that is, sort of well constructed as a kit, and then shipped to the job site, and then stored by warehouse partners. And that's one of the things that enabled us to stay on track, particularly when there were supply chain issues during high pandemic times and everything was closed and shipments weren't really happening. Warehouse partners made a decision early on to buy our materials when they were available and store them on site. And that's typically what we like to do as part of our development program now. And just as a wide overview of the building specifications, it's 140,000 square feet. It's got units of 2,500 plus or minus to 10,800, and there's 34 of the units. And they're 18 feet high, and they've got a 14-foot roll-up. They do have cooling, and there's HVAC in the office. So it's got an evaporative cooler in the warehouse, just enough for the Central Valley tenants. And it's got all the modern systems, like it's got internet, and it's got telecommunications. It's got it's wired correctly for what tenants need today. Maybe those tenants are used to something that was constructed maybe 30, 40, or 50 years ago, and it's just completely obsolete, and that's the best that they can find. So this is going to be a major upgrade for those tenants. And so in our project timeline, we've done a lot of the work, well before, we even, started contemplating offering this to investors. And so we're kind of in the middle here that, we're in our pre-development period. And so one would imagine that we're probably going to start construction here in the next couple of months as we raise the remainder of the capital. I would suggest that, if you're interested in investing in Porterville, you start to have that conversation now. We don't know when the investment will close out. Things happen quickly, and things happen, as things happen in the economy right now. So I would say if you're interested, start that conversation so you can have all of the information that you need. I would encourage you to reach out to myself or my business partner, Aaron Vault, and we'd be happy to field those questions. And that's what we do every day. And then in our project horizon, we look forward to developing and delivering a really nice light industrial park. Again, we're really excited about the Porterville market. There's a lot of things here that, just are a complete bonus, but we decided that, let's just go with our investment. It did get better over time. We have increased returns. Let's go with it. And if there's further increased returns potentially, then we'll just see those as an ancillary benefit for ourselves as investors and for the people that want to come in and invest in that Porterville Light Industrial Warehouse project. And then we'll look forward to a really stable project with a good stable of tenants over a long period of time. So we can look forward to quarterly distributions as the project starts to lease up and starts to cash flow. Again, that's a really important part of our project is, you can look at a project from many different ways, and you can analyze a project, a commercial real estate deal, using various metrics, but we use all of those tools, right? It's not just internal rate of return, it's not just the equity multiple or return on cost. We build all of those things together, and so we want to build it, we want to construct it in a really efficient manner. We want to get done with that development so we can get the tenants in and we can enjoy that cash flow. And in that cash flow over those years, we're adding a tremendous value, right? Because we bought dirt. We bought this dirt at a good deal, and now we're constructing on it, and now we have a finished light industrial project, and now we have tenants that are going to just increase in cash flow potentially over 10 or 11 years. And then think about all of that value when we look at the end of the investment in 10 or 11 years. And there's just tremendous value to be created, and there's just not enough light industrial being developed. And we see a lot of these light industrial business parks today, even the older ones that are trading really fast, often in a month or two for, if you're going to use cap rates or whatever metric you're going to use. I think people are really astounded at the prices in which and the speed in which they trade. And that goes to speak to how little inventory there is on the market, right? And so it's just a fascinating, niche of industrial, particularly California industrial. but that's why we like it so much, and that's why we're so enthusiastic. Is I think we feel as though it's so overlooked, but so important to that industrial economy. So, switching gears to QOZ, Qualified Opportunity Zone, you do get to defer your capital gains until the end of 2026, and then you do have to pay your capital gains at that point. So again, you take your capital gains, whatever you sold or generated capital gains from, invest it in the Porterville or a QOZ deal, and then you don't have to pay taxes until 2026. And I think that's a benefit in itself, that you don't pay taxes today, and then you get to pay taxes at the end of 2026. You got a stepped up basis at the end, right? So there's no additional capital gains because there's an increase in value, and we talked about value creation. Very much this project is about value creation. You get to enjoy the upside of the leasing program, the cash flow, right? Those quarterly distributions over that hold period. And, we're talking about, sort of this value creation, this return on cost, right? We're talking about, taking something that was basically dirt, and now we have this asset that's increased hugely in value potentially, and that's really where we're going to see a lot of the benefits. And you contrast that to other different projects where maybe there's just a lower return profile and it's just a little bit of cash flow, and these value add deals where the future is maybe not so the returns aren't really that significant, right? They're not generating a lot of wealth. And so, a lot of our investors, they're long-term investors. They're interested in preserving and growing wealth. And these are the type of investments that attract them. And this is not sort of an in and out, I'm trying to get in and out of multiple deals. You're really investing in the Warehouse Partners team. You're investing in us to really drive revenue and increase the value of the investment. And we've already seen that over the pre-development period where we've increased the returns already. We don't just sit around. We're going to want to try to drive value for all of our investors, because we are investors ourselves. And we can see from this aerial the location of the Porterville industrial development, and it's right next to the airport. The airport has received federal grant money to expand the airport, to get commercial flights in and military aircraft in. And so it's pretty exciting that a municipality of this size is going to have a great airport, and it's going to have a great entertainment district with the casino that it's built. And it's located in an area that the municipality has cordoned off for development, right? Light industrial, the casino. It's really the path of growth, right? We want to be not the first person into the market, but we certainly want to be, don't want to be the last, right? And so we have a lot of people and a lot of projects in front of us. Home Depot, Lowe's, they all have really great real estate departments. They all recognize, and they've been here in the Porterville market for a significant amount of time, because they know it's growing so fast, right? And so that's one of the key indicators that you can see with your eyes, is why a municipality that would be seemingly from an aerial so small, why does it have all these significant retailers? Why does it have so much development from major retailers, investors, the federal government, the state? They've added CAL FIRE, fire base here, Forest Service headquarters is here. The list goes on and on. And, we could talk about all of the, Walmart's most successful Western distribution facility is located in Porterville. It's 1 million square feet, we're told, from the municipality. So there's a lot of interesting things that you kind of have to, peel back the layers and understand. But that's really, what Warehouse Partners is good at, uncovering, is it's sort of those value pieces that really make a good development. And one of the benefits of Central California is its proximity to the other parts of California, particularly the big cities, right? These big metros. And if you're not really familiar with the layout of California, a lot of the things are, San Francisco, LA, San Diego, those type of things, Bay Area. And it's because of the ports and transportation, and obviously the municipalities are huge. These are really big mega cities. But the proximity in Central California to these various points, the ports and shipping and, up and over the mountains into the Western US by rail and by air, that's really what makes Central California really dynamic. And that's why it's growing so fast, right? Sort of that mix of business friendly, growth, and its strategic location. And so there's a lot of upside in terms of, the next decade on growth because of, the big metros. They see it, people there see it as extreme value compared to those metros. And, there's a lot of benefits to being part of that growth, right? Being on the upswing. And so I think as investors, we're going to experience sort of that uptick. And again, Porterville Industrial Warehouse, we see all these other these retailers located in and around our development. And again, they're not small developments. There's a major retail center. It's got really big anchor tenants, and those are the things we like to see because they've already identified Porterville well before us as a growth city. And just as a footnote, there are big developers developing in and around Porterville, the Tulare County area, and points just beyond that are 1 million square feet. That's stuff that you read about in the media all the time, that those massive concrete tilt-up industrial parks, those are going in with no light industrial support, right? And so one would imagine that a lot of the white vans that support those logistics, the Amazons and the Walmarts of the world, where they show up to our doors sort of really in that they call it last mile, but my partner and I really call it like maybe the last 100 feet. They use our facilities to sort those things, to store goods, because they have to create an efficient route and not come from those distribution facilities directly. And so key element of our tenant base there. And we're talking about low vacancy. What probably some people are going to think, okay, so how much industrial is available in the immediate area? And it's going to be almost zero. And these statistics show really low vacancy factors. It's in Tulare County. This statistic way back in 2019, and if you've read anything about industrial, it's become even more popular over these last three years because of e-commerce and because of the way the economy has progressed. There's so much pressure on industrial across the spectrum, and then you can imagine, because no light industrial is being constructed, that creates a lot of pressure on the existing light industrial spaces where they probably have, and it's been our experience, really long and significant waiting lists where they cherry pick the tenants. And there's generally, if you talk to maybe commercial real estate brokers, agents, that type of thing, generally what the phrase you're going to hear the most is there's nothing available, and there doesn't seem to be anything available anytime soon, unless we're talking maybe about a warehouse partners project. And let's drill into the tenants just really quickly. We serve a wide variety of tenants, and the tenants really make things tick in terms of the dynamics of everyday Porterville or our existing Madera development. And we're going to have really great small businesses. Again, they're going to have great balance sheets. They're going to be cash flowing businesses. These are really this part of like where the rubber meets the road. Warehouse Partners is really good at the management and leasing of tenants in light industrial. And we vet these tenants. We do our research. We make sure that they're a good fit. We make sure that they're they have the economics to be a good fit over a long period of time. We want them to renew, right? When I was a young person and my mother was hammering into me on our leasing management program, you really make your profits when the tenants renew, right? I'm going to come back to that phrase in just a minute, because there's something important about why we like light industrial. And just to create a footnote that we're going to circle around back later, and that is the low expenses you experience, and we call it CapEx sometimes, right? And so you'll hear that phrase, it's capital expenditure. The cost to operate these projects is low. But let's finish with the tenants, and then we can talk about capital expenditure and why it's so efficient over a long period of time. And so we're going to have, storage, and we're talking about industrial storage, we're talking about personal storage. Oftentimes, self-storage is a bad fit. you can't run your business out of it. And if you have large items, like we have challenges in the economy right now and people are downsizing, so it makes sense for them to put their stuff somewhere, but they can't access it 24/7 in a really secure way if it's large storage. And so we capture that market. And obviously we've talked about e-commerce. E-commerce is a great part of our tenant base and it continues to grow. Light manufacturing, we're not talking about heavy machinery or anything like that, but people who make things and produce a lot of specialized goods are a good fit for our light industrial business parks. Skilled trades, we have a lot of people that not only make things but service and fix things, and we have a lot of contractors, and that's part of the market in Porterville. Is just there's so much being built, and they have commutes of an hour, maybe more, to warehouse anywhere. And we have I think my business partner had mentioned to me that Porterville has maybe about close to 7, 8, 9 permits rejected per week because people are trying to warehouse on land or their property, and it's not appropriate for them to run their business or have light industrial. The airport is overflowing. The warehouses are full of storage and people trying to do light industrial things in the metal hangars. And so we would think that a lot of those would end up being really great light industrial tenants for our Porterville project. And we have a lot of, it's an agricultural part of the world, so we have a lot of people associated to the ag trade. They might build or be associated to agriculture in some fashion, and that continues to grow for us too. And so what I would encourage you to do is to register for the information on the Porterville industrial warehouse deal, and you would get all of the deal documents so you can analyze the project, and I think you're going to like what you find. And one of the goals for warehouse partners is to make the investment straightforward, easy to understand. I hope that we're easy to communicate with, and that investors find that there's very little mysterious about our projects, us, and how we run the investment. And that was something that my business partner Aaron and I worked on very hard to make things simple, right? It's a contrast. You have to work really hard to make things simple in this world. And you can review those offering documents, and oftentimes that's a good time for a Q&A. And I would encourage you to schedule a one-on-one call with me. And sometimes we bring in Aaron to do a screen share to take us through the various elements of the project or the deal. Just a quick note, I don't want to forget to talk about CapEx. In this world, things are really expensive. And we look at other asset classes as a way to give us perspective on light industrial. And things are just so expensive right now. And one of the things that I had learned when I was a young person working on medical office and laboratory was there seemingly was so much regulation in that space, and there were so many tenant improvements when either regulations came in or the tenants had new requirements, and it was always building and it got more and more expensive. And one of the things that I really liked about light industrial when I was introduced to it was there was seemingly so low capital expenditure, or there's no tenant improvements. And that's a key element of our projects, is that our spaces are spec, right? And that means is that, they are what they are. We build them to the market and it works for your business. And if it doesn't, oftentimes, things can be handled with equipment or just thinking about some solutions, but we don't do custom build outs, and we keep our expenses low that way. And because of the nature of the metal buildings, often if the tenant leaves for whatever reason, it's usually, maybe a quick paint and patch and a clean, and it's ready for a new tenant in days, and maybe a week. And then we have a brand new tenant, and usually they renew, or that we have a new tenant that's at a better lease rate, or they're a superior tenant. And that's been our experience because there's a significant wait list, right? And so we can take the best tenants that are available to us, and usually at the best lease rate. And so the upside on this project is potentially really, really significant. And that's one of the reasons why we're so excited about it. That's why we're so enthusiastic about light industrial. I do encourage you, if you have specific questions or you're interested in investing, get in touch with me. Schedule some time on my calendar, and we can discuss why light industrial might be a good fit in your portfolio, or if you don't have light industrial in your portfolio, maybe that's something you need to take a look at, and we can discuss if that's a good fit to round out your investment portfolio with something different, with potentially really big upside in a different asset class. Again, my name is Rob Boyce. I'm the CEO here at Warehouse Partners. I could talk all day about light industrial. That's how enthusiastic and excited we are about the Porterville project. I appreciate your time. Thank you for joining us on behalf of myself